general consistency. So, when we talk to our clients, everyone kind of comes to us saying, well, there's a market multiple for this type of business, and this is what I've seen, or this is what I've heard. That's great. And beyond everything else that you do, growth and profitability still and probably always will matter most. So the fundamentals of the business, how you perform over time and going forward is critically important. As I said before, the consistency of the business is key to any buyer. And so, we'll get into this a little bit later, but having a clean set of financials and be able to demonstrate the growth trajectory of the business in a responsible manner is key. And we've kind of coined this here, the Growth Inc. rule of 20. This is not a market thing here, but it's something that we consider always when we evaluate businesses, when we talk to owner operators. And that is, growth isn't an option. It's the only way forward. And think about that baseline of 20% year over year for an established business. And I know, at scale, the larger the company, sometimes it's much harder to grow at that clip. But even in between 10 to 20% is a very good metric to hang your hat on. So that's one. The other 20 is ensuring that you're paying attention to the bottom line. And that's a 20% EBITDA margin. So EBITDA is essentially operating income. And that is kind of a baseline metric that the market will use. If you can show a 20% EBITDA margin on your top line revenue, that is a huge factor going forward for you, again, to really increase value very quickly and search for premium enterprise value in the market. So, the sentiment has changed in the market over time, kind of going back to the pandemic era when markets were a little wacky and abnormal. It was more of a growth at all costs mentality for buyers and investors. Post-pandemic, when things have begun to normalize now, where we are today, it's kind of shifted back to responsible growth. And that is really important. So carry that profitability. Yes, you might say, well, Jeff, if I'm trying to grow the business, I need to invest. And therefore, if I invest, it might reduce the bottom line. That is true. I think you want to think about developing that trend line over about a 3-year period. But again, it will always win the day. Growth and profitability, showing good financial metrics, clean financial metrics with those rules will drive valuation more than anything else, in the marketplace. So, also, the last point on this, if you're outperforming industry standards on the front in terms of maybe you're growing more than other competitors or companies in your space, or your EBITDA margins, your margin profile is greater than that industry standard, whatever industry you might be in, major premiums there as well in terms of how to value the company. Buyers will recognize that and they will overpay for that. And so keep that in mind.